MCX IPF and CNBC TV18 present Commodity Classroom.
Hello and a very warm welcome to MCX IPF and CNBC TV18 presenting Commodity Classroom. Well, the theme under discussion is gold as an ultimate hedge for risk. We have seen gold prices continue to time and again prove it's important as a safe haven, as a hedge, and as a portfolio diversifier as well. Well, last year when it was pandemic hitting really bad and most of the countries were in a shutdown mode, we saw gold prices hit an all-time highs in almost 70 currencies. Since then, the gold prices have been quite volatile, but it has been an important period or a journey in last couple of years because we have seen people invest in gold, buy in gold, trade in gold in various avenues. So to understand the short term and the longer term of gold, how can gold be a part of your portfolio? How can it create wealth for you is something that we will explore in the next half an hour with our team of experts. Joining me on the panel is Shivanshu Mehta. He's head Bullion MCX. I also have with me Mr. Prithviraj Kothari from Riddhi Siddhi Bullion, Mr. Saurabh Gadgil from PNG Jewelers, and Mr. Deepak Gupta, Kundan Care Products Limited. Gentlemen, thank you so much for taking time out for joining us today. Shivanshu, let me start with you. And as a leading bullion exchange, what has been the experience in the last couple of years? How has pandemic impacted you for the good or the bad? What kind of investment, what kind of participation have you worked?
That's right, Manisha. You've put it very avidly that uh, the past 2 years have actually put focus back onto precious metals as an asset class. Of course, due to the pandemic, yes, wherein we saw huge rallies in gold as well as silver together. So, alongside our experience has been similar. As you saw that globally, you found that exchange traded products and electronic means of accumulation actually grew. So we used our time for further innovating on our product portfolio, and we saw that not only volumes, turnover, open interest, we hit multiple year highs in 2020, and we enhanced our product offering to launch the Bulldex, which is a portfolio type of a product, which is an index of precious metals. We also introduced for the first time ever Indian refined gold as a good delivery in our existing gold contract, gold 100-gram contract. And we saw options volumes also come off page. And we saw that during times of lockdown, when there was tremendous disparities in the market, by way of our compulsory delivery contracts, we saw silver hitting an all-time high in delivery. Thereby, we feel that somewhere the benchmark contract of the country has actually, played the role of bringing the spot to futures integration at the right time.
But Shivanshu, would you say that the way the world seems to be evolving, especially in the last couple of years, gold does stand as a more organized asset class?
Absolutely, absolutely, and you see that this is evident in some of our retail offerings doing well. We have the only gold 1-gram deliverable contract in the whole world. We were the first ones to introduce that. It's a world record. It's seen about 50,000 coins or thereabout being delivered since its launch in 2019. Silver 1 kg contract deliverable version also we launched during the COVID times. And we saw about 70 tons of silver 1 kg retail product changing hands, which actually indicates, that somewhere there is an organized way of looking at this as an asset class which is emerging, and people are willing to use the efficiency and liquidity of futures order books to actually accumulate electronically these products, which is enabled on our platform via the Comris system that we have. So definitely it has evolved as an asset class, that can be rightly said.
During the lockdown, people were sitting at home, but they were still buying gold at different various avenues. What is your sense? You are various stakeholders on this panel when it comes to gold and jewelry, etc. With the kind of volatile moves that we have seen in case of gold prices, how have you been able to make use of the bullion products, the derivative products on the exchange?
So basically, in the pandemic time, the volatility is too high in the international market as well as in the Indian market. The rupee also depreciate very fast in the time of pandemic. So it's a no doubt the only the exchange is there is the MCX exchange is there for hedging their instrument. The instrument it's hedged with the price and volatility everything because many players are this time in pandemic situation, the M2M issues are too high, and the prices, the movement is very fast, like $100 in a day. So luckily the exchange liquidity is always be there, so anyone can hedge easily with with the help of a margin.
Sort of just taking it away from what Mr. Kothari said when it comes to hedging, because the markets have been so volatile, and you being a jeweler as well, what works best for you? Is it options? Is it futures? How have you been able to make use of the platform?
So, Manisha, like you rightly said, lockdown presented us a lot of challenges, but at the same time, we got a lot of new opportunities. We had to make our consumers who were sitting at home look at buying jewelry. The stores were closed, so we came up with the innovative options of asking people to book jewelry or to order jewelry, and we gave them this flexibility of they can book the jewelry, and when the lockdowns open up, when they come to pick the delivery of the jewelry, whichever rate is lower, the booking rate or the rate of delivery, that rate will be applicable to them. So it was a win-win for a customer wherein he could lock in into a gold as an investment, get jewelry, and be able to get advantage of the price either at a time booking price or the price of delivery. Now, at our back end as jeweler, we had to ensure that this risk is covered, and this is where M6 came into our help. We use this to really hedge our positions here, and also we use options because this was kind of a option where you had to either give them the price of booking or the price of delivery. So we had to make use of call and put options, and like by paying 7 to 8% margins, we could really make use of the facilities. So it helped us as jewelers to be able to keep our business intact during lockdown, help our consumers to buy jewelry, and also not be affected by the price fluctuation.
Mr. Deepak Gupta, you have been the latest entry or entrant when it comes to the bullion market after the India Good Delivery really happened. What has been your experience with the Indian Bullion Exchange, with MCX?
Hello, Manisha. Till recently, commodity exchanges were accepting gold bars of LBMA approved refiners only, and Indian refiners bar were not being accepted, although their bars are meeting all international standards and parameters. However, since this last few months, commodity exchanges has accredited some Indian refiners, and their gold bars are also being accepted as good delivery bars. It is very good step for Indian gold industry. It increases the faith of consumers on the Indian gold refiners. Indian refiners have of late have shed their traditional image and are now competing with international standards of repute in their product quality. We expect more idle gold lying with the public to be recycled and comes into circulation, which is good for the economy. And there is one more benefit to the stakeholders. In case of Indian gold refiners, source can be easily checked as refiner name is embossed on the gold bars. But in case of imported bars, it is very difficult to check the source. That is, who has imported the gold into India and whether it is smuggled or official. So it is better to have Indian gold refiners.
Shivanshu, we've spoken about gold. To you for silver as well. What is the kind of market participation that you've seen into this one?
Yes, silver, in fact, has a very high proportion of physical participants in the options contracts that we have, which indicates that the writing side is well developed on the physical side front. We have recently also launched a silver 5 kg option on futures uh, as early as last month, and this is seeing good traction. And as far as the futures are concerned, the 30 kg remains the benchmark product again as a pricing reference point for the country. And even when the country went through a deep situation of price disparity and discounts, when the demand was very sluggish during the lockdown, and as you know, silver is something which presents a logistic hurdle, and normally in such circumstances, silver internationally also goes into discount because rather than moving silver from X to Y, people prefer recycling it. So there was a situation when there was heavy disparity, and that disparity was actually taken care of by the futures contract, which saw in September 2020, which saw the highest ever delivery of more than 140 tons in a single month in a single contract. So this has been a little bit about silver as such, what we have seen recently. Of course, volumes have been robust, and so have been the deliveries.
Gold and silver are better hedge mechanisms. They also are good portfolio diversifiers. And going forward, I mean, of course, we're not giving you any price views or price. This is not a price discussion as well, but this is an area which should be a part of your portfolio, just given by the fact that historically it has given you returns and also made money. With that, that's all the time that we have on this panel. Thank you so much, Mr. Gupta, Mr. Kothari, Saurabh, and Shivanshu as well. But stay on. Very soon, after this very short break, we'll come with the second panel where we will talk about the commodities market and the risk mitigation tools when it comes to bullion.
MCX, IPF, and CNBC TV 18 present Commodity Classroom. CNBC TV 18 EBIX Studio, powered by EBIX Cash.
मैसूर से कोयम्बटूर, भोपाल से बर्धमान, हम हैं तो रोशन रहे सारा हिंदुस्तान। एक्साइड, इंडियाज नंबर 1 इन्वर्टर बैटरी।
भगवान क्या करूं?
अरे मूर्ख, ये ले मोबी क्विक से पाओ 30,000 तक बिना इंटरेस्ट। स्पेंड नाउ, पे लेटर।
Have you ever given a thought to how you will clean your clothes without water? How will you wash your dishes, mop your floors, and clean your toilets? We all know that we have sanitation because we have water. So guys, let's get together and uphold this mission to save water so that everyone can adopt better hygiene. Aapik News 18 Mission Pani. Remember, स्वच्छता और पानी आखिर बचानी है जिंदगानी.
Start your startup dream. Fund your financial freedom. Catch Financial Quotient at 2 p.m. on Fridays only on CNBC TV 18.
Financial Quotient, CNBC TV 18's Women and Money series. At these times.
Powered by an investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund and ZebPay.
MCX, IPF, and CNBC TV 18 present Commodity Classroom.
Hello and a very warm welcome to MCX, IPF, and CNBC TV 18 present Commodity Classroom. And gold is on spotlight right now. Gold has been known as a wealth creator for years, decades, ages. And as time goes by, newer, better, easier ways of trading, acquiring, and holding gold is what the markets really seem to be seeing. There are being more of them introduced and adopted in the markets as well. And that's exactly what we are going to discuss with this panel right now on what is the best way to acquire gold, what is the best way to invest into this one, whether it's a short-term or a longer-term stance that you should be looking at, and how better a portfolio diversifier it can become for you. Joining us on the panel is Mr. Shivanshu Mehta. He's from MCX. Also joining on the show is Mr. Nayan Gogri. He's from Quant Group. Mr. Dilip Narayanan is from the Malabar Group. And Vikram Dhawan joins us from Nippon India Mutual Funds. Gentlemen, hi. Thank you so much for joining us. Shivanshu, let's begin with you first. And gold as an asset class pretty much has established itself in that sense. But the way the markets are changing in the last couple of years clearly has shown on how the technology has, preponed itself, advanced itself rather, and we have seen new investors come into the market. But the newer investors also are millennials, and they don't really want to invest in things that perhaps their parents did or the previous generation did. How are we coping up with that, and what are we providing for this new generation?
Yes, indeed. The last 2 years, Manisha, 1.5 years especially due to the pandemic, has actually brought this asset class back into focus, but not necessarily with the same means of investment. We've seen globally, if you look at it, one has seen bar and coin, ETF, and other electronic methods also go up along with the physical bullion. Likewise, we saw gold and silver rally, tremendously last year, and alongside we have seen significant increase in turnover, in volumes and open interest across all our contracts. And for millennials and for people who are looking at this for the first time, we have introduced certain new products around the same time. One, of course, is the world's first gold 1 gram deliverable contract called the gold petal, which can help investors accumulate electronically and hold as well as take delivery at 1 gram via an SIP, via a futures order book, which is liquid, deep, and wide. We have also launched the Bulldex, which is the first bullion index product wherein you can take exposure to precious metals as an asset class, gold and silver put together. That has also seen very good traction. So, from the investment point of view, these two have been recent innovations from our side.
Vikram, this one is to you. So, what are the newer products that you have seen come into the market? And if you were to advise someone on buying gold, what would you say is the best way to go forward?
From the investor point of view, you need to be very clear what is your investment philosophy and why you need to put gold in your portfolio. Is it for hedging? Is it for tactical reasons? Is it for absolute returns or portfolio diversification? Because historically gold has given returns somewhere between debt and equity. So if you have a portfolio which is skewed towards debt, you may want to add gold, adding some safety and some excess returns over a longer period of time. Again, this is based on the past returns. There's no guarantee that debt market or equity market or gold market will continue giving those returns which they have given in the past. Could be better or it could be worse. And if you're an equity investor and whatever risk parameters you have in your portfolio, you may want to hedge some part of that risk either by debt or by gold. If you are an investor which believes in capital markets, which believes that wealth creation in the longer term is possible through capital markets, then you should be looking at gold ETFs, primarily because of two reasons. First of all, liquidity. Secondly, the gold ETFs are 100% backed by gold bars, which pass through rigorous checks and balances, and they are from suppliers of high integrity. So you are actually buying into very high quality gold bars when you're buying into gold ETFs. Despite of not having any patron, gold remains liquid during the times of crisis. So if your liquidity is what you aspire for in your portfolio for the hedge, then I think gold ETF is the best way to go forward. And obviously, you don't need to time the market. There are gold saving funds which offer you gold SIPs, so you can build up a gold position in your portfolio through systematic route also.
I mean, tell me, what is a perfect portfolio? A lot of equity, because real estate is not so much part of your portfolio anymore. People don't add real estate to their portfolios with the kind of price moves that we have seen there. So, what is a perfect portfolio as per your sense, and how much part should gold be of?
I think the ideal way to part from the real estate is definitely the gold one. But currently, looking at the prices which has been went up, looking at the Indian scenario, in last 5 to 7 years, there is very good growth, but it has been stagnant for last couple of years. So looking at the pandemic, we have seen because of the COVID and all, there is a very lesser liquidity available in the hands of the people. So those who are investing in the real estate for so long might not be seeing that good returns are possible for the next few years as same as what they have got in last few years. So gold definitely gives there is a second, the second option for the real estate is definitely the gold, because the amount of liquidity that gold has as compared to real estate is almost similar or much more. So holding gold into the portfolio, they are definitely looking for the investment in somewhere else, and gold and silver will be the precious metals will be definitely their first choice. And that might be the one of the reason that in last 1.5 to 2 years we have seen this tremendous rally in gold in rupee terms from around 32,000 till almost log around 55 to 56,000 in the peak, and right now around 49,000. So this might be the one of the reason that Indian demand has been increased towards the gold as a part of the portfolio. And looking at the future, that it looks like very evident that gold is on the charts is on the bricks of breaking its trend, and once it crosses around 1800 to 1850 levels, then again it might touch around 2000 plus levels in dollar terms. And we are as a group we are very much bullish on the precious metals, gold and silver. And MCX definitely provides one of the top picks in terms of the liquidity as well as the number of contracts it's providing, right from the people who want to invest from 1 gram until multiple of kgs or in let's say crores of rupees they want to invest in gold, they have a very easy option available with them. And the good part is that the delivery they get from this bullion exchanges, MCX, is one of the purest form. And one of the reasons that people hold physical gold and they're worried in recent past because of they've got cheated in many ways because of the purity issue they've faced with the many suppliers they're getting regularly. So one of the good reasons that MCX is providing is that there's a 100% guarantee of the getting the purest form of the gold in any of the contracts, like 1 gram, 8 gram, 100 gram, and 1 kg. All different types of denomination are available for different types of investors. So people will definitely look forward, and there is a tremendous awareness has already been spread for last 2 to 3 years about these contracts, and you can see the amount of delivery that 1 gram contract is getting in last few months is very tremendous, and it definitely add a lot of value being invested in gold, and the future looks very bright compared to other asset class as of now. So currently, in today's scenario, gold is definitely one of the top picks of investment in, and also as a diversification to our existing investment portfolios.
Dilip, when you came out with one nation and one price of a quote, and when you implemented it across your showrooms across India, that clearly did bring in a lot of transparency, a lot of accolades as well for you. How has the reaction been, and how has the business been since then?
One India, one gold rate, that's something which Malabar got it launched in October 2020. Well, the uniform gold rate across the states and country for 100% BIS hallmark gold and diamond jewelry was what we promoted. And our aim was to protect the consumers' interest by providing them with a uniform gold rate and not compromising on the purity. Well, the afterwave of this initiative was we had definitely seen an increase in sales, building up consumers' confidence in the brand and protecting customers' rights. It's been definitely initially we were a little bit not sure about the fact that how do we run the hedge mechanism for this product, but with exchange with MCX around and various few other exchanges around, we were able to sustain this product. And as of now, we are quite successful in this.
How are we looking at this market going forward in sense of participation? And what products do you think are doing better than the other? And which ones do you think will do better than the other going forward?
I think instead of a forward-looking statement as such, what we can say is that what has happened in the COVID era, no doubt it has put this asset class into focus, gold and silver both. The idea is to actually empower the customers, and when I say customers, this includes hedgers as well as speculators, with organized ways of investing. And we have tried to cater to that demand by creating products, including the index, Bulldex, which is ideally suited for the kind of customers that you were referring to, because it's cash settled. It's something which can be part of the portfolio along with equity and fixed income, etc. So also the smaller denomination contracts like gold petal. So we just believe in empowering the customers. On the option side, it is basically for the hedgers, where as per the regulatory requirements, also as part of the LODR, one is required to disclose the hedging mechanism being followed by listed entities. So we are finding that a lot of consciousness is being built around that. And I think we'll continue to see more and more hedgers, smaller jewelers come into the mainstream, which is based on the continued, the efforts at awareness creation and best practices, under regulatory environment, which we spread. So this is, the ecosystem has to expand, and the ones who are using the products can explore further out of this portfolio, which is available to them of various denominations, various types of instruments like futures, options, and maybe spot, which is likely to come, the spot contract, which will actually complete the picture going forward.
Thank you, gentlemen, so much for joining us. It has been an enriching, exciting conversation. We thank you all for your time.